Jenny, I know you don't like the transports to own them, but do you still like the index to watch it, or is it sort of outlived its usefulness?
No, I think it's interesting to watch, but I also think it's representative of something broader in the market, which is that we saw a huge rotation in leadership between the beginning of September last year and the end of March this year. And then the first 2 weeks of April, it seemed like the super mega cap tech stocks were getting their legs back and they were resuming their leadership position. But I think what your transport RVI reminds us is that's probably going to be short-lived. And if we look at those super mega cap stocks, and if we look at FANG, for example, FANG still has a multiple of 39 times on it. So we're all complaining about the market being at 22 times. Well, FANG's at 39 times. There's a wide gap between the valuations of last year's haves and the entire rest of the market and the have-nots. And so that transportation RVI is really cool because it reminds us how far there is to go, how much other leadership momentum there is in other sectors of the market. So yeah, I don't own them, but I think it's very meaningful.
Okay. You know, we talk also meaningful, certainly COVID cases coming down by half in the last 2 weeks in America. Thankfully, vaccination's up. What I don't understand is, Jenny, Pfizer creates this vaccine. Whatever your political views on vaccine, who cares? The vaccine is working. Right. Pfizer creates this amazing vaccine. By the way, thank you to them. Stock gets no respect. None.
Yeah. None. And they're reporting earnings next week. So one of the things that I've been talking about lately is how you need to have not just the valuation, not just the story. You need to have the valuation and the story to make a great investment work in concert, and I think this is a beautiful opportunity for it. So you've got Pfizer trading at a multiple of 14 times. They've got a 4% dividend yield. They've basically just saved humanity. You cannot say, oh, but it's a sleepy old school, you know, they don't innovate. Come on. Not only did they show that they're completely agile, but they're unbelievably innovative. So if you want to put a stock in your portfolio and just forget about it for maybe the next 2 decades, this might be a really terrific one. Cheap valuation, so it's not like you're teetering on the edge of a cliff. You've got a huge margin of safety because of that. Yeah, and what are they going to grow earnings at? I don't know. Maybe 7, 8, 9, 10, 11% on average over the next 5 or 10 years. That's terrific. But it's not going to be a two-bagger. It's not going to be cocktail party fodder. You're not going to be like, oh, hey, mom and dad, I'm giving you $100,000 for my 23rd birthday in honor of you. It's not going to give you that opportunity. But you are going to sleep really well and own something terrific that's going to, in a consistent, normal way, return to your portfolio.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.